with regards to commodities, we're quite bullish in the long term on all commodities. We're still a believer in the China story, and we believe that long term there's opportunities to be had everywhere. In the short term, we can see oversupply in quite a few commodities, but one that we think will be lacking supply is zinc. So zinc is our commodity that we're picking in the short term. We just see a lot of supply coming off, and we don't see too much of a change in demand. So that would be our pick. Obviously slightly biased there as a mining analyst, but I would be looking at the junior mining space. I think that it's been sold down an awful lot over the last year or so, and I think there's still opportunities. In a sense, this is a correction that we needed to have, because there were a lot of junior miners that were probably not making best use of shareholder funds. They were promoting projects that perhaps a major company or another company would decide it's time to move on. So correction needed to be had, but there are some great opportunities there. We've seen the likes of Sirius Resources and Papillon, which I'm sure most people are familiar with, do pretty well. They are standout performers, but we've seen smaller companies, the micro caps, do very well as well. I mean, there's a company called Regal Resources, which is one of our top picks, which has almost tripled its market cap in the space of a month or so, just based on a smart acquisition in Africa in the copper space. We've also seen London's AIM market has really started to pick up interest in the junior, in the exploration space. Companies like Mariana Resources and Sol Gold have released some interesting, very early stage exploration results and seen significant moves in their share prices. So there are still opportunities in the junior mining space, and I think, because they've been so sold down, this is something that investors should start looking at. Well, as I said, Regal Resources is one. Obviously, it's done very well in almost tripling its market cap on the back of this recent copper acquisition, but I think it still looks incredibly undervalued. It's management that have done this before, so they've just acquired a project in the DRC. It's a high-grade copper project. Looks to me to be, at this stage already, 150,000 tonnes of contained copper at about 2.5% copper. So, in the tradition of the DRC high-grade copper, and that's the main reason why you'd be in somewhere like the DRC. But what attracted us to the company before this acquisition was the management team. David Young has worked in the DRC for a long time and done it before with Tiger Resources, which is, I'm sure you know, is the Kipoy project. Now he took that from exploration to the point of production, and now it's producing and doing very well. There's no reason to think that he can't do it again. And the technical director I used to work with, Simon Dorling, is a very capable guy. So you've got the technical side and the commercial side and the understanding of the country. Not to mention their contacts in country. DRC is not the easiest place to operate, of course, but they have a joint venture arrangement with Traxys, a trading partner that trades commodities and has lots of contacts in country, and they also have their own contacts in country. So the partnership with Regal and Traxys means Traxys has a lot of contacts and can trade the commodity, but Regal has the expertise to mine. So we like that, and it looks extremely undervalued at just 4 to 5 million market cap right now. The other one of our top picks is less to say on this, as they've done most of it, but it's Base Resources. They're developing, they've developed essentially the Kwale mineral sands project in Kenya. They are looking to ship to the first shipment first quarter of 2014. I think once they get that out, there'll be a definite re-rating, as it looks undervalued. The thing that attracts us to Base is it's the highest on a revenue to cost basis, so the highest profit margin of any of the mineral sand producers that we know. So over the next 5, 6, 7 years, it's looking to pump out large profit margins. It's a simple mining method. It's dry mining rather than the wet mining that some people, like Ken Mayer and co, will use and have had difficulties with. So we see limited risk with the mining technique, and we're very familiar with a management team that has 120 years experience in the mineral sands space between them. So So good, sensible, fully funded project that at this stage looks undervalued.